Many commodities have been performing incredibly well over the last 6 months, but copper is seeing a confluence of many different factors that are combining to create a real buzz in the space.
For me, the key driver for copper is the global transition to clean energy. A 3 megawatt wind turbine contains up to 4.7 tons of copper. Solar technology uses around 5.5 tons per megawatt. Then there's energy storage, grid infrastructure, and of course, electric vehicles. Consider a standard vehicle uses around 20 kilos of copper, hybrid 40, and a battery electric vehicle 80 kilograms per vehicle. So on top of this green energy transition, you've also got the post-pandemic stimulus packages to boost economic growth. Recently, US President Joe Biden unveiled the long-awaited infrastructure plan worth $2 trillion, a surge in building covering roads, railways, and airports, and naturally metals intensive. But the real game's in China. It accounts for over half of global copper production. Last September, the Chinese president surprised the world by announcing the country would reach net zero emissions by 2060 and would peak their carbon use before 2030. And in March, we got the details of the country's 14th five-year plan. It sets out an 18% reduction target for CO2 intensity and a 13.5% reduction target for energy intensity. The plan also presented a list of construction products for the modern energy system. And it forecasts that the urban-rural population split is to hit 65%, from 60.6 in 2019. So that's an extra 100 million people moving to cities by 2025, and the requirement, of course, for the extra infrastructure, housings, etc. So in short, I think China delivered a much quicker than anticipated recovery post-pandemic, while elevated physical buying, combined with this narrative of metals-heavy global green recovery, has pushed copper to near 10-year highs.
As well as the demand story, copper has experienced supply issues, many of which predate the pandemic era.
If you consider a slightly longer time horizon, there's certainly support for copper's bull case on constrained mine supply, mostly due to a lack of investment and the long lead time required to bring on new mines. So certainly on a 3 to 4 year view, we could be seeing some sizable deficits in the copper market as supply growth stagnates, while at the same time, demand for copper in the green energy sector starts to become more meaningful. I think on a shorter time frame, there's already real tightness in the copper market, evidenced by the collapse in treatment charges. Now, this is the fee levied by a processor for converting concentrate into refined metal. And treatment charges rise when there's plenty of material and fall when there's a shortage. And right now there's a real shortage. Now, it's not so simple because smelter economics are complex. They're impacted by market prices for the free metal content, credits from gold, silver, and the market conditions for sulfuric acid that's generated. So I'm a little bit hesitant to conclude that there's going to be a lot of smelter capacity coming offline, and therefore clearly an impact on refined metal production. But certainly it is a real risk, and it's a narrative that the super bulls are using to justify copper breaching $10,000 per ton in the coming months.
China has been the primary copper consumer for a couple of decades. During 2020, they implemented a supply-side response to the pandemic and took advantage of early weakness in copper prices to rebuild inventories.
I think as the world's largest consumer, China is always center stage when we're talking price discovery. Most importantly, was just after the first quarter, which was hit by the pandemic. In May 2020, Beijing launched a 3.6 trillion yuan or $500 billion fiscal stimulus package. A package that was, yet again, very investment and business orientated, with relatively little support for households. So high activity in the infrastructure and energy sectors boosted copper consumption. Now in the fourth quarter, now this is estimated by Bgrim, it's a domestic consulting company, increased by 13.5% year on year, while for 2020 as a whole, consumption was up by 2.9%. On top of this, there was some restocking. So if you look at refined copper imports, they amounted to 4.67 million tons in 2020. That's an increase of just over 30% year on year. And this rise was mostly due to a surge in imports in the June to September period. And that's around an extra 900,000 tons from the usual run rate. About 2/3 of that volume is rumored to have been purchased by the State Reserve Bureau, or the SRB, which is in charge of building the country's strategic reserves. Now, the SRB does not publicly disclose its activities, but the acquisition price during the June to September period in a range of around $5,500 to $6,500 per ton for copper certainly looks attractive basis previous purchase patterns.
The bullish fervour behind copper is picking up ahead of steam. Although the long-term outlook is extremely robust, is there any danger that prices have become overextended in the short term?
Yeah, I think, it's more about profit taking than an outright bearish positioning now. So if you look at the commitment of traders report, we've seen the longs unwind in February and in March, while the short position has slightly increased. So on balance, though, I think you've got to consider the Q2 is a seasonally strong quarter for copper consumption in China, and the fact I've already mentioned in regard to the tight concentrate market and possible risk of losses on the refined metal side. I think, at least for the short term, price risk is still skewed to the upside.
Copper prices are approaching their all-time highs. China's still urbanizing, whilst the green revolution is global. Many leading commodity investors echo Bruce's outlook for the metal. Perhaps the biggest risk in the short term would be a surge in the level of the US dollar or a sudden rise in real yields. But for now, both of these appear to be on the back burner.